Take a look at Toll Brothers maintaining its full-year outlook despite softer demand in the second quarter. The company's CEO saying the long-term outlook for the new home market still remains positive. Joining us now with more, Jay McCanless, Wedbush Securities Senior Vice President of Equity Research. And Jay, you've got an outperform rating and $175 price target on Toll Brothers. Talk to me about your reaction to the print here.
Little surprised. Thanks for having me on. Little surprised the stock isn't up more. It was a pretty handy earnings beat, and I think if you look at what they said about demand during the quarter, February was actually their weakest month, and then they saw order demand pick up in March and April, and has continued at that same level at May. So that was really our big fear going into this print, was that April was going to be soft and May followed, but it's actually the reverse of that. They also said on the call that they're increasing their stock repurchase up to $600 million this year. $400 million of that is going to be spent in the back half of their fiscal year, which ends in October. So little surprise, stock's not up more, but longer term still very positive on this name.
And talk to me about where they stand in relation to competitors. If Toll Brothers, as a luxury builder, had these decent numbers that you're saying, are they more protected than other home builders in the luxury space?
I don't know that they're necessarily more protected, but I think if you look at their customer mix right now, roughly 70% of that customer mix is not completely rate independent. But what management said on the call today is that buyer who doesn't necessarily worry so much where the rate is has really had a crisis of confidence, especially at the beginning of their fiscal second quarter. That confidence seems to be improving somewhat, and management didn't put a number behind it, but said if they can get confidence back up for more of their consumers and maybe get a little help on rates, that there's plenty of underlying demand out there for the houses. And I think that's very much in line with what we've heard from Toll's competitors, both the move up and the entry level, is that the demand's out there. We just need some of the headlines to settle down and need affordability, especially for that entry level buyer, to start working in their favor again.
And my guest host, Brian, has a question for you as well.
So, Jay, we've already seen some challenges at the lower end consumer over the last few years. What would give you concern for the high end consumer? They say it's when the high end consumer rolls over where you really start to get concerned. So what would you be watching for?
Well, I think what Mr. Yearley gave us on the call today in terms of consumer confidence, maybe putting a little more emphasis on that than we have in the past with Toll. Historically, it's always been, you watch what the stock market does, and that usually drives Toll's orders for the next couple quarters. And they affirmed that relationship on the call today, but it sounds like just general confidence levels may be more important to that buyer right now. And then, at a more base level, it's all about the jobs. If you don't have a job, you can't get the house. And I think that's, whether you're a high-end consumer or low-end consumer, that's the same math for everybody. So far, the jobs picture has held up pretty well, but any slippage there is something that can make us more concerned about Toll and some of the other move-up names that we like at these levels.
And beyond the near term, we always hear in this country about not having enough homes. Is that accurate, and how do we quantify that?
It is accurate. I think depending on the economist you ask, it's somewhere between 2 million to 5 million homes that we're short in this country. I think especially if you look at what household formation's been doing the last 3 years, we've certainly continued to underbuild relative to that. But I think the problem that we have here in the U.S. is that it still takes a long time to take a farmland all the way to a finished lot. Lots of permitting challenges along the way, some NIMBYism in there. And until we find ways to address those, I don't think we're going to catch up with that gap. So, yeah, I think there's a gap there. It's a pretty wide range of different opinions, but I think for the home builders overall, it should still be a demographic tailwind for them. Again, assuming that the job picture holds up.
And Jay, final minute here, but it makes me think about the economic data. There's been this idea that the spending of the ultra wealthy is perhaps hiding some economic weakness going on in the other majority of the population that is struggling a little bit. I wonder to what extent that shows up in some of these names that we're talking about, like a Toll Brothers. You mentioned that you're still looking for that recovery in more entry-level inventory sales. Is that a potential canary in the coal mine for a company like Toll Brothers, or can the continued spending of the wealthy cover any weakness in that lower income group?
So far it has, but it's, I think it's certainly if we were to see the low end get even weaker or mortgage rates go up, we're sitting at a 7 handle now on the 30-year. If we go back to an 8 handle like we saw back in 2023, that could be something that really challenges the low end. And then again, if we were to see some kind of slippage on the job side, but at this point for Toll specifically, their higher end customer is carrying the weight for the lower end consumer. And I think Toll also said on their call that they're going to be reducing the number of unsold homes that they start, just trying to be a little more conservative with the balance sheet and knowing that the entry level and call it first move up consumer is facing some challenges right now.